A pretty big move could happen vis-a-vis the whole Euro-Russian ruble pair. First off, read this disclaimer carefully, and do your good deed of the day by liking and subscribing. So let's first, get some, the bigger picture here of the market. We are seeing some recovery here in the cryptos. I mean, they did pull back a lot. Hence, it shouldn't be like a huge surprise to have some mean reversion here to the upside. The problem for the cryptos is that they are severely damaged. So the entire psychology around them has changed. So the bulls, they need to pull off something pretty spectacular to actually repair the psychological damage. And the psychological damage is very, very important to be aware of, because in order for the cryptos to break out to new highs, in the near future, not only do you need new people to get into the cryptos, you also need the people who are already invested. You need to get them to buy more. That's how it works, and the sentiment has changed. When we look here at the sectors, we do see some rotations today. We see that technology is getting a bit of a bid. Technology, if we look here at the pullback from the 52-week highs, it's one of those that's been beaten up a lot. Hence, this is also one of those examples of how, there's benefits to thinking like a contrarian, because you do get those higher percentage moves when the contrarians get to work. The megatrends here, you see that there is some significant outperformance. They are fighting back a bit, but you see that when we compare the distance from the 52-week high, the S&P 500 versus the megatrends, there's a pretty substantial difference. And then again, the gain from the low is much bigger on the megatrends. So definitely high beta. So let's now go to the forex pair. So we will look at the euro / the Russian ruble. So the euro is the base. We have 18-ish% here from the low, minus 4.5 from the 52-week highs. It is a significant move. And the thing is that we do not get any seasonality data for this pair. Unfortunately, this is just a result of it not being, among the pairs that is watched the most. I did find some very interesting time cycles. So if we look, if we start here, you do see that there's a relatively decent match between the time cycle and price action. Here we get the pullback in the time cycle, close to the price, rise, decline phase, rise, decline. We do get that decline there. Because this was in an uptrend, the decline will of course form a higher low. Recently, looking at these two time cycles, they have been very, very attractive. So here we have basically nailed the low here, nail it here. Here we almost nailed the peak here at the middle of the time cycle. Here, beautiful time cycle. So the time cycles have certainly gone from being decent at projecting price development to really getting good. Hence, if this continues, then it is highly tradable time. Signals from the time cycles. So here we have a beautiful trade up to the upside, to the downside, up, down, and when we look here at the current time cycle and price action, we do see some sign here of some topping behavior, or I guess you could call it, exhaustion here for the bulls. That does fit pretty well here with the time cycle, where we do expect a pullback around the corner, heading towards 2023. And this is a huge time cycle. Looking at RSI, we did start to deteriorate here when we pushed into the overbought higher risk territory. So interesting. So that is what the time cycle suggests, but we need to, of course, explore further. Let's go here to, yeah, if you look at some of the moving averages, we do see that we do have multiple moving averages as resistance above us, but in order for the pullback to accelerate, then we need to see a break of the green 50-week moving average. You see that here, when we break, that's when it really starts to accelerate. And then you also have the 20-week moving average in purple, really forming that key resistance level. You see here, test, rejected, rejected. So that was a highly shortable signal. So here you have the green 50-week, visualize below. And then to a very significant degree, the 20-week moving average became that key pressure to the downside. So we did fight a bit here, but then the bears came back. So we are now testing. We tested the green 50-week moving average here, and we are still above it. Based on that prior history, we certainly would expect the bears to get rather aggressive when we lose that support, because it has been that key signal in the past. Let's look at the daily data points. And here we got the correlation with S&P 500 at minus 31-ish%. So here, daily data points, the 200-day moving average was very critical here for this time cycle. Test, test, test. When we do break below, then we have that solid resistance. And here we are rejected from the 200-day moving average, and the bears get back to work. So now we are testing the 200-day moving average vigorously, and the current setup, it is starting to become rather favorable to the bears. The problem here for the bulls is that we didn't bounce and rally strongly, because ideally when you test a moving average, you want to bounce and then go to the upside. What happens here is that the bears test, 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 test. And now it is testing. The bears are testing so vigorously that we are starting to see us getting stuck below that moving average. Yeah, so that's so we do have a very interesting emerging bearish setup here, which means that the euro would weaken vis-a-vis the Russian ruble. The narrative behind the chart is that. We do have this strength in commodities, that's number one. That's beneficial for Russia. You also have a bit of a change here in the geopolitical backdrop. There was a lot of talk about Nord Stream 2, the natural gas connection between Russia and Germany. There was a lot of, intelligence agencies and so on and so forth that didn't want that to happen, but it is now happening. From a geopolitical standpoint, there is this major change in America, because America has for some time been very busy looking outside, solving problems elsewhere with a rather limited success rate, but now there's been this change in which we see that the American intelligence agencies are looking inward in a way that we haven't seen in quite some time. And that is a result of, the social cohesion in America breaking down to a very significant degree. So yes, I do think that what we will see is that America will be more concerned with re-establishing in the internal cohesion of the country, and be very distracted by that, and that reduction in geopolitical external concerns is going to be bullish for Russia.